I think it all depends on where your capital comes from. So, everybody's got different return objectives and hold period horizons. So obviously the listed black box placings are extremely competitive at the moment. They have a lower cost of capital. The US bond funds have a lower cost of capital. There are points of entry in the NPL and servicing areas that Cerberus, Apollo, Lone Star can play. So it really kind of all depends who you are. I didn't know that Dalian Wanda had bought a building in Madrid. I think that is very interesting, because I didn't know a sovereign had entered the market. So I think like we've seen in the UK, it'll start transitioning from the opportunistic distressed players more to the funds, the insurance companies, the sovereigns, and the REITs. I mean, that's what's going to happen, and they'll have different hold periods, longer hold periods, and low return expectations. I think what is interesting is debt. I mean, there is very little domestic debt in these markets. So, I can borrow on an asset in Germany at 90 basis points. I'm borrowing on an asset in Spain at 450. Mm-hmm. So there's very different debt dynamics going on, which clearly has implications for returns. But again, hopefully those debt margins will compress as people start entering the markets from a debt perspective, which is not really happening yet, interestingly.
But it is interesting, of the last 35 deals we've done, I think maybe only 5 have been structured with debt initially. The rest have been bought pure equity, which does not mean that they are not going to finance later. But I guess the opportunity, and the speed to market, kind of indicates that you need to fund it pure equity and then gradually leverage. But that has been the case. That's a fact. I mean, people are not relying on debt for their decisions, or if they are probably having the debt that is in place, but never new debt.
And I think that the German funds who were very active in the 2000s, they're not really active, or they're beginning. No,
they're starting now.
Starting now. So that'll be interesting. Something to watch.
So the German fund's coming back to the market now for those.
Starting to look. I think
they're trying this. It's not easy for them, because as we know, as we said, with all these new things in place, with the pressure to buy, and I think with different strategies, but also being quite competitive on the core plus core segment. I think they are just not getting there on time sometimes, but they are interested for the very good core. They find they bet on fundamentals, and now fundamentals are safe because they think economy should go up. We don't know how fast, but it should go up. So and they have comparables now for pricing. So we will see German capital into Spain and Portugal and Italy.
Good. We are seeing a bit of that also in Italy. So we mentioned that. I remember just before the summer, being part of a couple of funds, there were disposing of assets in Italy until a few months earlier. Now looking again at opportunities, problems are good opportunities on the market. That's not so easy to access probably.